This is Andrew Stotz of Stotz Investment Research, looking at world-class benchmarking for Asia Aviation Public Company Limited in Thailand. Let's get a little background on the company. First, Asia Aviation Public Company Limited was incorporated in 2006 and is a low-cost airline business investing in Thai Air Asia Company Limited. AAV owns 55% of Thai Air Asia and 45% is owned by Air Asia in Malaysia. So AAV is currently the leader among low-cost carriers in Thailand, with its fleet currently totaling 49 aircraft as of July 2016. And if we look at the share price of the company and the background, we can see that the market capitalization is close to $1 billion with $19 million in average daily turnover. And what we can see of a beta of about 0.8. If we look at what's going on with the company, we can see AAV operates in the low-cost carrier business and invests in one company, which is Thai Air Asia Company Limited. And this company leads the pack among Thai low-cost carriers, in which it owns 55% of all market share, while the remainder, shares in the company, while the remainder is owned by the Malaysia parent. And Thai Air Asia operates along international and domestic routes. Among the flights operated by them, 62% are domestic and 38% are international. The fleet consists of 49 Airbus A320 aircraft as of July 2016. International routes cover cities across China, such as Changsha, Chongqing, and Guangzhou, and Hangzhou, and Kunming, Shenzhen, and Wuhan, and Xi'an. I flew into the Wuhan one on one of these planes once. And other routes include points in Vietnam, India, Myanmar, Indonesia, Cambodia, Laos, and Iran. Wow, I would love to go there. I heard it's beautiful. Now, domestic routes connect cities such as Bangkok, Chiang Mai, Chiang Rai, Khon Kaen, Krabi, Loei, Nakhon Si Thammarat, Nan, Phuket, Surat Thani, Udon Thani, Roi Et, Nan, and Loei, as well as Hat Yai. And Thai Air Asia flights can be booked directly and through third parties, which are travel agencies or tour operators, and in the form of charter flights. So let's take a look at the revenue breakdown by segment as of first half 2016. We can see scheduled flight operations basically is all of the revenue at 94%. Chartered flights just bring in 6%. As far as the passengers carried, we can see 62% are domestic passengers. Now, let's look at the world-class benchmarking score of the company. So, first of all, we can see that there's an independent director who's been there since 2012, Mr. Arak, and we have a CEO and the founder, who is Mr. Tasapon, who was there since 2007. So now, let's take a look at the performance here, and what we can see is that the company's performance was world-class in 2012 and then went down to number 9 in 2014, and now it's back up to slightly below average at a 6. Now, that's only better than 560 of 1,400 large industrial companies worldwide. Now, let's look at profitability and growth. Remember, profitability is return on assets and growth is EPS growth. Profitability is below average at a number 6. Not particularly great, but growth is great at a number 2, and it was 1 in 2015. So let's understand where these are both coming from. First of all, profit margin has started to recover. We can see it as a number 4 now in the past 12 months. And we can see that sales growth and margin change are solid at a number 2. So it's a slightly below average performance, but improvements are happening in sales growth and margin change. So do you want to see the profitable growth rank for a company in your portfolio? Well, leave a comment below with the company name and country of listing, and I will post it if I